Hilton brings you new ways to stay, with experiences that let you capture the glory days. Introducing the Graduate Hotels. Each inspired by local college towns, these stays are always original and never boring. Get in touch with traditions all across the country and enjoy a stay that's a class above the rest. Book at Graduate Hotels with Hilton Honors Points at Hilton.com. It's a win-win. Hilton, for the stay.
Reality radio for a really great future. We're talking real money.
Hi, welcome to our little get-together. We call it a radio show. We call it a podcast. But what it really is, it's an education. It's an important education. We are here to try and help you become a better manager of your money because I am convinced and somebody said I did this for 40 years. I've not done this for 40 years. No, it's 30-something. But it's not 40. It's not 40. But what I've learned is I just don't think the bulk of the financial services industry is in your corner. I just don't think that. The more I look at them, I mean, in the last hour/podcast, we talked about Blackstone and these products they create with these ridiculous fees. And they're just not looking out for you. It's a game. It's a game they're playing with your money. And it's your money. They shouldn't be getting rich off of you. You should be getting rich off of them.
Well, and then how about the Elon Musk story where a lot of people did get rich? Then a week ago, he asked all his Twitter followers, should I sell 10%? Now, I was surprised that it was like 60% said yes. Now, most of those people probably hold Tesla stock, right?
Yeah, it was a dumb idea to say that.
Yeah, I mean, you gotta think when he sells, how much did he sell, I don't know.
Well, he only sold 5% last week. He only sold 5% last week.
And he sold more. But, I mean, the stock went down by like 15% over the week.
Yeah.
Bingo, bango. I mean.
And this is, but the problem is Elon Musk needed to sell stock because
he was kind of coy about that.
Well, but that was a game he played because he could have just gone out and sold it, and then people would have said, "Oh, you're selling your stock." And now he can say, "You told me to sell it," because he needed to sell it to pay the taxes on options that he got. So it was a complex financial strategy on his part. And by the way, somebody recently said, "Do we have our first trillionaire in the making?"
Yeah, I don't know what.
Imagine.
Yeah. Anyway, he is the world's richest man right now.
His net worth was about $250 billion.
One quick divorce could blow that up, though, really quick. So hang on for that. But what are the lessons learned from this? If you're an investor, because one of his biggest investors says, nope, the Tesla stock is heading to 3,000, where it's now trading about 1,000. So, I mean, she's still a believer. Many people still believe her, of course, in the product. By the way, I think I did read this last night. I think they're selling, is it 900,000 cars next year or something? But each of those cars to pay off, according to the stock valuation, is worth about $1.3 million. I mean, that's... Wow. I mean,
okay, that illustrates the problem with the excitement over these growth stocks. And,
exactly.
And you know what? Tesla reminds me a lot of the internet stocks in the 90s when we knew some of them would grow like crazy, like Google. But you didn't know which ones would be the big winners. Amazon, these were all coming up back then. But you didn't know who would be the big winner. Tesla's gotten bid up to the point where it's as if they'll be the only car company. And you know that's not going to be the case.
Another one went public this week. By the way, my dog still has his pets.com stock that he's holding on to for the turnaround. Tucker's waiting for the big rebound on that one. So, yeah. I mean, okay. So one lesson is, frankly, again, and we've mentioned this a couple of times, we do not believe in owning, nor do we recommend to our clients, period, that you own individual stocks. There are too many unknowns. It's too risky. The chances for default are great, right? I mean, and I'm not saying Tesla's going out of business. I don't think Rivian will send them out of business.
The risks are high.
Yeah, I don't know why. The only reason to do it is you make more than the market. Now, Tesla has done that for a long period of time. Well, like 5 years, long period. Mm-hmm. But the next 5, they may lose money. I don't know. I don't care what Kathy says about all that.
Kathy Wood cracks me up. Kathy Woods. Because she's a cheerleader for the things she loves.
I know. Yeah, well,
and she gets media. See, she owns them. And so she gets media attention because of who she is. And that in and of itself often drives the prices of the stocks she's touting higher.
And by the way, how much of Tesla do I own?
How much of Tesla do you own?
Yeah.
Let's see. And what's your stock bond allocation? 80-20. So you own about, in a typical well-diversified portfolio globally, probably about 0.4% of your portfolio is in
I'm okay
Tesla.
with that. Yeah.
That's probably just the right amount, don't you think?
I think it is. And I don't own any of the Rivian.
Rivian. You don't own any Rivian.
Although I may own a Rivian. I kind of like the looks of the car, but you talked me out of that one so good. I had my finger on the button. All I had to do is press, and I would have put $1,000 into a car, but no, it didn't happen.
$1,000. Well, just the first of 75,000.
No, I think it was 70, but okay. Fine.
No. If you looked, it was 75 if you wanted any color other than white. 855-935-TALK.
Are talking real money.
A second opinion could save your life either physically or fiscally. Let one of our Vestory advisors help you save your future at Vestory.com, Vestory.com.
Your guides to a really great financial future. Tom and Don are talking real money.
I just went online and found the story. Elon Musk ends the week selling nearly $7 billion worth of Tesla shares just this week. And Tesla executives and board members have been selling their stock too.
No.
Isn't that interesting?
Yeah. But Kathy will buy them all up, not to worry.
Yeah, sure she will. 855-935-TALK. That's our phone number. Give us a call. We'll try and help you manage money better than you did before, or your money back.
Every nickel.
Every nickel you paid for the call. 855-935-8255. And Michelle, you're next. Welcome to the show.
Thank you. Hello.
Hi, Michelle.
My husband, he's 59 and a half.
Mm-hmm.
He worked in the 90s for 5 years for a company. So we've got this like $35,000 in a Fidelity account that's just been, sitting there since he left.
Okay.
So I'm trying to figure out what, if anything, to do with it. So we have an option to roll it into his 401k at work, my non-work 401 or IRA, or we do have 3 kids in college. Trying to think about withdrawing a little bit here and there to maybe help fund their college. So just if you had thoughts whether to leave it alone or roll it into something else. So
let's go back. Let's go back and make sure that we're agreement on all the potential options. Number one, yes, you could take the money from an old retirement plan and move it into his new one. Mm-hmm. Number two, you could take it and move it from his old retirement plan to an individual retirement account.
In his name. What you mentioned about something about moving it to your account, I don't believe you can do that because you'd be moving it into an individual retirement account. That is his account, couldn't be moved to yours. If you needed money to pay for college, I don't know that this is the best place to take it because even though he's 59 and a half, you're still going to pay regular income tax rates to take that money and move it to your bank account and pay for college. So that'd be my last choice. My first, honestly, would be because of simplicity, roll it over to the plan he's in today because it's just easier. That way you get one pre-tax account then. It's simple. It's easy to keep. If it has good funds.
Yeah, I mean, that's the struggle, right? I mean, just to make a blanket recommendation without seeing what's in it. If not, then you would, in my mind, you could go to any of the major fund families, Fidelity, Vanguard, or Schwab, and just own a target date fund for simplicity, low cost, pretty well diversified, and you don't have to worry about it. They'll make the adjustments for you as he gets older.
Does that help?
Okay. Yes. Thank you so much.
Yeah, you're very welcome. Thanks so much for the call. 855-935-TALK is our phone number. You can also send questions into us at talkingrealmoney.com. And boy, do we have a doozy for you.
They've all been doozies.
We just happen to know a lot about this company. We've worked with them before.
Okay. I know where we're going now. Yep.
Okay, here's the message. Smart Asset can't seem to make up its mind. Smart Asset is, you'll see, if you read any financial media online, anywhere, you're going to see ads for Smart Asset.
You may not know it because they don't put their name at the head of it, but you'll
see. And they claim that they will get you a fiduciary investment advisor, and that they will default to fee only versus fee based. And they list all these big name firms like Fisher and the like on their things, and then they make you fill out a form, and then they send you 3 names of advisors. Now, when they send you those 3 names, you're gonna get phone calls. Trust me, you're going to get them.
They're going to get them fast, and you're going to get them often.
Let me go ahead and read the rest of this guy's note. He said, the link takes you to the top. This link he sent me takes you to the top financial advisors, which turns out to be a list of the biggest. They're not the best. They're the biggest. The list is, let me get it for you here. Fisher, Cap Trust, Wealth Enhancement Group, Messero, Summit Rock Advisors. These are all gigantic firms. And I've looked them up. They're all, Fisher's expensive. They're stock pickers. There's good ones and bad ones. But let me continue his note. Smart Asset will also try and match a person up with a fiduciary advisor. Going through that process, I was given 3 names. None were these top firms. 1 was a dual registered advisor with mostly insurance background. 2 was a dual registered advisor, mostly stockbroker type. 3 was a dual registered, mostly stockbroker type that had paid a lot of fines. They had a disciplinary record.
Good Lord.
I'm looking for a financial advisor, but Smart Asset would make things more confusing if I was. Your opinions, please.
Okay, well, just to make sure people understand, Smart Asset is not a financial services company.
No.
They are a marketing company.
Yes.
The idea here is Don mentioned, you may read their stuff online about, hey, here are the 4 reasons to do blank, blank, blank by the end of the year, whatever it is. Mm-hmm. It's that kind of thing gets your attention. And then in the article, they might say, hey, do you need an advisor? We know where we can find you a great one. You fill out a form, and as Don said, they will send you 3 advisors who, by the way, are paying a lot for your name.
Up to $680 for your name.
Yeah. So they're paying quite a bit, and they're going to be, as you said, Don, aggressive. They're going to call you a lot, and it has the people that they're working with have the quality, as you just mentioned, has nothing to do with whether or not they're working with them. Simply people that will pay the freight for that prospect. That's it. There's no real vetting process, I don't believe, where they really
apparently
sit down and look
not.
at
if one of them had disclosures.
No, I mean that's outrageous. Or they may have worked their way down to that. I don't know.
They just ran out of people. Well,
yeah.
I, for the greater good of the Talking Real Money audience, sacrificed myself and one of my many email addresses. I gave them a fake phone number, but one of my many email addresses I sacrificed for the greater good of all of you. And I put in information. I was a pretty sophisticated investor, et cetera, et cetera.
Well, that's true.
They said they were going to get me the 3 best advisors in the Orlando area. Mm-hmm. The first one I got was a guy with Raymond James.
Oh, sorry, I spoke too soon. Yeah.
Raymond James, which is a broker-dealer.
Indeed it is.
Now, it says he's also an investment advisor representative with Raymond James Asset Advisors. Yeah, of course. They're both. They're dual. This was a dual registered advisor.
Yeah.
Okay? So I looked at that one. I didn't look up his fees, but I did on the next one. The next one is with a firm called Cetera, and I'm familiar with them too. That's a broker-dealer. That's a dual registered
They've been around
advisor.
for a while. Yeah. Mm-hmm.
Yeah,
yep.
and I looked up his ADV Part 2. The maximum client, assuming you get him as a fiduciary, which you may or may not, because there's conflict of interest all over his ADV Part 2, the maximum client fee on the first $250,000 is 2.25%.
No.
Yes, I'm not kidding.
Is this 1970 or 2021? That's crazy high.
Then the final one was with a company called Life Wealth Group. He's the only one. No, there were 2 of them were CFPs. Okay. See, this is the other thing is they're CFPs. How do they work for a broker dealer? They're not supposed to be allowed to. His maximum fee was 2.75%.
Good Lord. Please, that is really crazy.
So my suggestion would be if you're looking for an advisor, this is not the place to go, and we'll give you some advice on how to find one.
Tom and Don are talking real money.
Tom and I created Vestory to help everyone become a better investor, even those who will never be clients. Let one of our advisors help you start your financial plan or solve a money problem free with no obligation or high-pressure sales pitch at Vestory.com. Vestory.com.
For your real life and real future, Tom and Don are talking real money.
I decided to be fair. I would look up the Raymond James fee, too, just to be fair. I think fair is important.
Well, wait a minute. Didn't we have somebody last hour that was getting like 8% for a particular fund or something?
Yeah. Well, and by the way, these guys, all of these guys, and by the way, they're all guys, these guys could sell that Blackstone 8% thing.
And then collect the 2+% as well.
I looked up their ADV Part 2.
No, they're going to tell you we never charge that much, Don.
Well, their maximum fee at Raymond James up to $1 million.
Yeah.
For the first $1 million is 2.25.
We never charge that.
They do charge that. They state it
always
right.
say that.
When they say that, it's like, then why is the 2% in your? If you always charge 1%, wouldn't it be good for business to put 1% in your ADV Part 2?
Do you want to know why I think they put it in there?
Why?
Because to the unsuspecting who walk in off the street and say, "Hey, I really need help." Oh, we've got a program for you. And then they put them in high expense funds. They charge them 2+% a year for the pleasure of doing that, etc. So
I don't know.
Sad.
I'm just very
sad.
frustrated. But here's what I suggest everyone do. You're looking for an advisor. Finding a 100%. This is the key part of this sentence is 100% fiduciary advisor is really hard because according to MarketWatch, 99% of advisors are not 100% fiduciaries. Only 1% are.
They're either broker-dealers or duly registered.
Insurance agents,
et cetera.
all that. Oh, it's so painful. But here's what
how do you go find one then?
It's hard. It's hard. It's going to be hard because only 1%. The odds are you're going to talk to 100 people and 99 of them are going to be wrong for you.
Okay, how do I just go to the 1%?
Well, you don't, but we're going to up your odds. We're going to up your odds.
All
you
right.
go to talkingrealmoney.com/help. We've put a lot of resources there. I spent a lot of time vetting some of the bigger financial firms in the country. So if you got one of these, you can look up what their maximum fee is, whether they're 100% fiduciary or not. But if you're dealing with another one, we have on the website a 2-page advisor interview form. Here's what will happen. You will take it to 100 advisors, and 99% of them, 99 of those 100 will say, oh, I can't fill that out. We're not allowed to fill that out. Because if they were 100% fiduciary, low-fee advisors, they would have no problem filling this form out. Why? As long as you tell the truth, you're totally okay. And the form basically says, do you charge? How much do you charge? What kind of investing do you do? Are you always required to act as a fiduciary? We have signed our own form at our firm.
We have. Mm-hmm.
No reason not to. If you're telling the truth, what trouble are you going to get into?
Okay, so go to talkingrealmoney.com/help.
Yes.
What if you go to talkingrealmoney.com/hell? Do you get brokers then? I mean, what do you get then?
And we'll give you the list of all of these three guys that I got from Smart Asset.
Yeah, people are going to want to know which one did you end up going with?
Myself.
Which one did you? You didn't hire any of them after all that?
I just got their names today.
Okay.
And by the way, they haven't sent me any emails yet, but they're going to.
Oh, boy, they will Monday morning at 6 a.m. Sharpie.
But I gave them a fake phone number. I gave them my old home phone number. That doesn't work ananymore.
It'll ring and ring and ring and ring.
It'll ring somewhere. I don't know where. But
you're a nice guy.
I want to thank Mark. Mark's in Edmonds. And Mark, this was a terrific question.
Yeah.
And I got to say, Mark, the other thing, at Talking Real Money, you're in Edmonds. I didn't even notice. Go to talkingrealmoney.com/help, and we actually we'll give you the names of some advisors in the Puget Sound area that we are pretty confident are always going to act as a fiduciary and have reasonable fees.
And actually, considering the recent weather, they might actually just be in the Puget Sound at this point.
Right, just wash down into the Sound.
There you go. So pick one with a raft.
Yeah. No, an arc. An arc.
Bring it by the way, if you got one.
Kathy Wood's got an arc.
That's true. Yeah. It's holding water, kind of. Well, we'll see how it all shakes out after this Tesla blow up. So,
but do check it out. We've got some resources for you, and it is hard. It is really hard, and I hate to tell you all this, but there's probably about 20 or 30,000 of you listening. Out of that 20 or 30,000, there's like 20 or 30 of you who have a fiduciary advisor.
I know that hurts.
No, 200 or 300 maybe. Well, if you all have advisors, but you probably all don't have advisors. 855-935-TALK. Give us a call. We got lines open for you right this very moment.
Tom and Don are talking real money.
Want a free copy of my book, Financial Physics? Well, go download it right now at vestory.com. VESTORY.com.
Reality radio for a really great future. We're talking real money.
If my old knees didn't hurt so bad, I'd get down on them and beg for callers. Get down on my knees and beg for callers.
Never get back up again.
I wouldn't. 855-935-TALK is our phone number, 855-935-8255. I was at a community event last night. It was really bad. This little town I live in was having its Founders Day celebration.
Okay, but let's just go out. It's Celebration, Florida.
Celebration, Florida.
Yeah.
So
kind of a...
Actually, it was the first part of it. The last part is tonight when we have fireworks because, we're near Disney. But anyway, I was there with a friend. I haven't seen him in a couple of years since COVID. A guy who's a orthopedic surgeon. Mm-hmm. And we were all talking about our knees. And I get, we're sitting at the park drinking a beer. And he's like, he goes, come over here. He's like poking around going, I think I'm getting an exam in the park. I could be a meniscus. I'm going, I don't know.
Okay, remember 30 years ago, the things we used to talk about, and now today we talk about what hurts and what doesn't hurt?
Yeah, it hurts.
Sad.
It's old age. Anyway, I was begging. Was that the
yes,
right? Yeah, I was begging.
You were going to get down on your knees, please.
Begging people to call us at 855-935-TALK. I am not above begging. I am just not. It must be the flooding.
I think it's the lack of pride. Oh, the phone lines are out, I'm sure. Yes.
And that thing is stuck in the upright position. That thing, whatever that is. You're supposed to see a doctor if that happens. If it gets anyway.
After 48 hours. Call someone.
Is it 48 hours?
I think it is. I'm sorry.
If your bridge is stuck I'm sorry. 855-935-TALK is our phone number. The kids don't know what that means.
Which is probably a good thing.
It's better. That one time when we said the P word.
Oh, yeah, that was bad.
And we got in trouble with the guy whose kids were in the back seat.
Yeah, I know.
So now we have to call it cheesecake instead.
That's right, cheesecake.
Cheesecake. Investment cheesecake.
All right, what do you got? Hit me.
I got a question for you that came in at talkingrealmoney.com. Mm-hmm. Thank God for the people who send questions into talkingrealmoney.com.
A lot of them. Yeah.
This was typed in. This is so short. It's so easy for you. You're going to knock this one out of the park, Tom.
Can we use a football analogy? You're going to outkick your coverage or something.
Okay, you're going to out whatever. You got. Wait a minute. What is there a soccer term I could use that would make you? Oh my gosh! I forgot to mention the doc. It took me forever to recognize this. The doctor guy. Mm-hmm. He's kind of funny, and
this is the one probing your knee during a social gathering.
He's probing my knee, Debbie's knee.
That's a little weird at a social thing, but okay.
He's wearing like a soccer jersey.
Yeah, well, it was a big night for soccer last night.
He's wearing a soccer jersey, and I kept looking at it, going, "This looks so familiar to me," and I am not a soccer fan.
You're coming around. You used to be a lot worse than you are today.
Yeah.
So
But the jersey he's wearing.
Yeah.
I look on the back, and it's let me tell you. I look at the front, and the mascot is a greyhound.
Yeah, I don't know who that is, and I do know a lot of soccer.
The Richmond Greyhounds.
Yeah, well, very popular
from Ted Lasso.
That Richmond, England.
Yeah. And the back of it said jersey. Kent. Roy Kent. Oh, you haven't watched it yet. See?
Yes, I have watched it. I watched the first 3. I'm going to try again.
Apparently, you weren't in the right mindset.
I guess
for Ted.
so. I'm going to try it again. I said I would.
It's so good. I love
But now I'm on
Ted
Yellowstone's
Lasso.
back on the air, and so anyway, so
All
we'll
right.
see.
All right.
Okay.
All right. All right. So anyway,
Begging
we're
for
going. Here's
questions
the question.
didn't work. Yeah, go ahead.
Are AVUV, which is the Avantis U.S. Small Cap Value ETF, and AVUVX, which is the Avantis Small Cap Value Institutional Mutual Fund, the same equivalent investments? They're exactly the same.
Let me just a second. I'm going to do a little research.
AVUV, AVUVX.
Second. I got a check over here in the book.
The
Yes,
big book.
they are. Yeah, the big. Remember when you used to have that?
I used to use the big Morningstar book.
Yeah, those are the same. And by the way, this is something we're going to talk about at Retire Meet. I think you know this, right? That Paul's doing an entire segment on why you need to own U.S. small cap value.
Oh, really?
Yeah.
That's a good topic.
Because most people don't own it.
Well, Paul, that's a really good topic.
Yeah,
I know he's probably listening.
And by the way, so if for those of you a little late, that AVUV, it's up over 70% in the last 12 and a half months.
Let me finish the question, though.
Yeah.
In my employer 401k, there's a behavioral advantage to using the fund instead of the ETF because I can automatically purchase shares each payroll period. If I use ETFs, I have to manually purchase. Use the fund then. They're exactly the same price. They're the same portfolios.
Tom and Don are talking real money.
Is your portfolio a mess? You may have a case of hodgepodgeitis, but don't worry, we can help. Just set up a free, no-obligation meeting with a Vestory advisor at Vestory.com. No sales pitch, guaranteed. That's Vestory.com.
Your guides to a really great financial future. Tom and Don are talking real money.
855-935-8255 is our phone number here on Talking Real Money. And you know what? We found one other thing that pays well. Groveling. Groveling pays. It pays dividends because Cynthia called us because we groveled. Hi, Cynthia. Welcome to Talking Real Money.
Hi.
Hi.
You were talking about VREIT and that it has an 8.8% initial investment fee?
No. It was B.
No.
B as in boy. R.
Vanguard's REIT would be no upfront charge and a very small expense ratio. The fund we were discussing is issued by Blackstone. It had an upfront charge and expensive to operate. So no. Vanguard would never have a
okay,
Vanguard does not have a product like that. I don't know if they ever will.
And it's just that the symbol that they use for the Blackstone REIT Trust is B as in boy, REIT.
Okay, I got it. You know, I was thinking of Vanguard, but it's so impossible to reach them and talk to them and actually get an advisor and all this.
It's impossible.
Yeah, they've just, the thing about Vanguard, they've grown very rapidly. Number two, the structure in which they operate requires each fund to pay its own way. It's kind of a weird business structure, so they can't really get out ahead of hiring. The funds have to bring in enough money, then they can hire. So they've been behind for a number of years. And yes, we do get many people that complain about the lack of service. You really, truly got to be a do-it-yourselfer if you want to use Vanguard.
Vanguard,
products.
You have to be an online user. You really do.
Yeah.
And the good news is their website is very, very user-friendly. I find it to be terrifically user-friendly. So if you can avoid the phone.
You got to buy the stuff at Vanguard, because now if you go to Schwab and buy Vanguard, they charge you $75.
Unless you buy the ETFs.
Yeah, that's true. Okay.
So if you go to Schwab, you can buy the Vanguard ETFs through them, which I do. I own some Vanguard ETFs through Schwab.
Mm-hmm. Yeah, I know you're trading every day. You're in and out.
Oh, my gosh, I'm
up
just
and
crazy.
Down,
but I did not buy
Tesla.
BREIT.
No, I'm glad you brought that to our attention.
Yeah, thank you, Cynthia. Thank you for the call. Anything else?
Yes, you said Schwab charges $75 to do a Vanguard trade?
A Vanguard mutual fund trade, yes, ma'am.
Yep.
They say they have no transaction fees.
Not on stocks, but on mutual funds that are not in their own stable or some of their no transaction fee funds. And these are funds that pay them the transaction fee.
Yeah, see, here's the thing. Vanguard won't play the game that the industry's played for a long time, which is sharing some of that money with the people that are the custodians. Vanguard simply says, no, you can use our funds, but now you're going to have to pay a commission because there's not going to be any kick. It's the method of doing business. So I don't think Vanguard's the only.
No. Any low fee fund. Dimensional didn't do it. I'm sure Avantis doesn't do it with their funds now, because what you had to do is you had to kick back to them part of your 12B1 fee, which is a marketing fee, and Vanguard doesn't charge a 12B1 fee, so they don't have it to pay Schwab.
So Don correctly points out, either A, just go right to Vanguard and buy the funds there, or B, use the exchange-traded fund version, of which they basically have every ETF
almost everything
of the
now, including the real estate fund. Now there is an ETF for that, which is the symbol is VNQ. VNQ, the Vanguard Real Estate ETF. And it's got a lower expense ratio.
Victor, right? November.
Oh, good for you.
And Quebec.
Is it Quebec? Really?
Yeah, it is. Yeah, Victor.
Let's see. What's the ad? It's 0.12 on the ETF, and the Admiral version of the real. Oh, it's 0.12 on the Admiral now.
Yeah, they've cleaned up a lot of that. They cleaned up a lot of that
Oh.
stuff, so they just got low fees for. I mean, that's very low. It's very diversified. We've looked at that portfolio previously.
Gosh.
You own thousands of REITs and you pay almost nothing for it, versus Blackstone, where you probably own a couple hundred REITs and you pay a ton.
No. You just own real estate.
Ah, okay, got it. Yes.
It is its own REIT thing, I think. So I don't know, but
anything else, Cynthia?
Yeah, just because we got time. I think she's gone.
We have more calls. Trina.
We do have another call.
Look at all his calls.
No, fine. You're all calling at the end of the show now.
Never fails. We'll go
Trina,
for the calls.
welcome to the show. Hi.
Hi, how are you guys?
Good, Trina. Thanks for calling. What's up?
Hey, I have a question. I was listening last Saturday, and you guys had made a comment about you should be thinking about retirement before the age of 53. It's like around 25, and I was like, oh man,
You missed it.
So so my question is, how do you know how do you determine the amount you want to retire on? I mean, how do you do you do a cost of living? Is there some kind of math that you guys do to figure out, I'm going to need, say, $5 million to retire? How do you come up with that?
Good question.
Well, there again, and we started the whole program with this notion. Yes, you mentioned something about cost of living. The first is how much money are you going to need to spend? That's a number. Then you can go look at all the sources of income you're going to get in retirement, Social Security, pension, etc. Outside of that, then you have to use your savings to supplement those other sources. So there isn't really, sometimes I hear people say you need to have saved 25 times your annual salary. I don't buy into that. Again, I think everybody should have a plan especially after age 50, I would say. A good advisor helps you understand how much you're going to need, how that money should be invested sort of for the long haul to provide your income for a long period of time.
But it is a planning process, and there is no set number. And sometimes you have to adjust your lifestyle to fit your financial situation. You look at both. You say, what do I think I'm going to need, and then what might I realistically be able to expect? So, you need a plan, and it's not that hard a plan, but it's one of the reasons why we have an advisory firm, because we help people do that. Thanks for the call, Trina. We appreciate it. Kelly, you're up next. Welcome to the show.
Woohoo! Thanks for taking my call.
Thank you.
I have a question. My husband and I we each owned a home before we got married, and then we bought another home because, why not?
You have too many homes now.
Yeah, apparently. So we turned them into rentals, and he is getting ready to sell his rental because he's at that point. He's older than I, and he needs the money.
Mm-hmm.
So my question is, we talked to our accountant, who apparently didn't understand or isn't doing what we're asking, because I would like to mitigate the tax consequences of selling this rental.
Mm-hmm.
And we had some other person tell us about Delaware statutory.
No. That's just an expensive. Wait. Now, when did you get married? When did you get married, Kelly?
It's been 15 years.
Oh, I thought this was something recent. So you guys have owned these extra houses for 15 years?
Yes. Yes, we have.
You're not going to be able to help yourself with the taxes.
No, I mean, again,
you're really not.
And you're going to pay long-term capital gains tax on that. Get your money, pay the tax, get on with your life. You could do a 1031. Yeah, you could do a DST. There's all kinds of gimmicks.
DSTs cost a fortune.
You could do an opportunity zone. I mean, there's all kinds of gimmicks out there that I think truly are gimmicks. And eventually you pay the tax anyway. That's my take.
Yeah, exactly. And you're just going to pay. You're going to spend a lot of money with a lot of quote experts to avoid a tax that you're eventually going to have to pay, and maybe at a much higher rate in the future. So, bird in the hand, take that bird. Don't go for the two in the bush. 855-935-TALK. Call it 24/7.
Tom and Don are talking real money.
Set your course for a great future with a free copy of our 60-page Better Retirement Guidebook at vestory.com, vestory.com.
For your real life and real future, Tom and Don are talking real money.
And Trina's question is one of the reasons why we have decided, and we decided 10 years ago, more than, oh my gosh, like 12 years ago, to make our advisors available to everybody for a little while. At no cost or no obligation or sales pitch, because everybody needs to know what that number is when they get to retirement. You've got to have a target toward which you're aiming. And most of us don't know what that target is. We don't know how much we need. Well, sit down with one of our advisors. They'll help you figure out how much you need, even if you're going to do it yourself for the rest of your life. It's fine. We just want to make sure you get on the right track and that you don't get misled. So if you want to meet with virtually, on the phone, even in person, I guess, if you're in the Seattle area, go to vestory.com, vestory.com.
We hope you realize that the information provided on Talking Real Money is for educational and hopefully enjoyable purposes only. Providing personalized financial planning or investing advice takes time, so please consult with a really good fee-only fiduciary investment, tax, or legal advisor. We know a good one. Investing must always involve risk. In other words, you can and probably will lose money at times. Also, as much as you want it, no one can accurately, consistently predict the future. So past performance doesn't tell you a darn thing about what the future will bring. Unlike many other programs that say something similar, Talking Real Money is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Vestory, a fee-only registered investment advisor. Thanks for listening, and please visit TalkingRealMoney.com for more information and disclosures. Are we done now?